Our next guest this morning just raised his target on Nvidia after Friday's reversal that did drag, as Mike said, the chip sector below the 52-week high. Let's bring in CJ Muse, Cantor Fitzgerald analyst. CJ maintains a buy, raises his target from 900 to 1200. CJ, it's great to see you. Was Friday a shot across the bow?
You know, I think there was, ample debate whether GTC would be a sell the news event. And considering, the stock move year to date, a pullback like we saw on Friday is not unreasonable. But for sure, if momentum, is a factor that you're focused on, it probably makes you a little bit more nervous coming into the week. But I think if you take a step back and you think fundamentally, this is a company that's probably going to earn $35 next year. And if that's right, you're paying 25 times today for one of the best growing, best, generative AI leverage plays. So, shot across the bow, sure, but I still think it works.
What do you think GTC delivers? What do you think the keynote's all about?
Sure. I think it's interesting, right? They're moving into the SAP facility, so you're talking 16,000 people now. So, it's going to be a big event. I'd say first and foremost on the hardware side, they're going to launch their new Blackwell architecture. That is double the performance of the existing architecture. So, you've got a big wave of growth there into 2025, which is really important. The second one is software, right? It's $1 billion business today. That'll be a $10-15 billion business over the next 5 years. That gives you confidence. And then last would be on the inference side. I think they're going to give you a lot of use cases that help you understand that 40% of their mix will continue. So you put it all together. Once you get confidence that growth is sustainable into 26 and 27, the stock's going to move higher.
I guess, CJ, you mentioned, going to earn, by your numbers, $35 next fiscal year. So you're talking about, paying mid-30s multiple on that, which doesn't seem extreme on paper. We've seen Amazon and Tesla as mega caps trade more expensive than that. But we haven't seen a $3 trillion company trade quite at that multiple. And it seems like the real onus is on the story being sustainable for multiple years. It reminds me of the Tesla trade where it was, don't worry about the valuation as long as we feel like it's grow, 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 and we have another story to follow the current one.
Yeah, no, I think you're spot on. So, right now we're looking at like $100+ billion data center business for next year. If you think that half of the data centers will become AI architecture or AI enabled, that's a $500 billion business for Nvidia. And so that's, I think the direction that Jensen sees, that's the direction that many experts see. It's the direction that I see. And so if you believe that, we're going to surpass, that mark. If you don't, then obviously, we're near peak. But, I think if you believe in the generative AI, building into data centers and driving AI infrastructure, then this is a multi-year trade. And we're still, I don't want to say early innings because that's not true, but there's still plenty of leg room higher.
And I should point out that I was saying $3 trillion, that's at your $1,200 price target.
Right.
You would have to do that math. And I guess for the consensus for next year is about 30. You think 35 is more likely as earnings.
Yeah, I mean, if it's 35, but you're paying 25 times today. Yeah. And over the last 5 years, the stock's traded at a 40 times forward PE multiple. So you could actually argue it's cheap. Again, to your point, you got to believe in the sustainability of the growth.
I wonder how you see the broader space right now. There's been a lot of work done lately on the broader dispersion of returns of all the components within the stocks. Why the difference?
Well, I think, first and foremost, AI leverages what investors have wanted, right? So Nvidia, AMD, Broadcom, Marvell have really been outperformers. In the last week or so, we've seen, maybe a bit more focus on value. So TSMC has done well. I've seen kind of a focus on the edge, trying to figure out what's next. Qualcomm, Teradyne are names that come to mind, and they have started to kind of push higher. So, I do think that, investors are now trying to figure out, the N+1, what is next for the group. If I take a step back, we're still only 3 to 4 quarters into this cyclical upturn. Average cycle's 9. So, I think you're safe to own the group all year. I still think AI is your best exposure. We do like front-end semi-equipment as the arms dealers to AI. Analog is a group where we don't think we get to the prior cyclical highs. So we would be very picky there. But the edge AI is probably a place, to spend time. And that's where I'm definitely hearing from, my clients a greater focus.